Hello, welcome to my midweek recap here for Apple. On Wednesday evening, price action did make a move above my Fibonacci levels. I was looking for a move above 172.30. Now, in all honesty, on the open, I was actually focused on Intel and managing a position I was in over there. So I did not take the initial entry here on a break below and reclaim of that top Fibonacci level. However, Apple put in a very nice flag continuation formation, which I did take at the 12 January 175 calls at 105. Closed out half my position up here at 137. I was expecting price action to continue much higher and run up all the way to the gap fill at 175. In hindsight, however, I noticed the low of that previous gap was 174.5, which technically could be considered filled. We'll see what happens going forward. But I did leave some on the table because I was simply being a little bit too greedy and trailed me out the other half at 120. So overall, decent profits there. Nothing really to be too sad about because it was profitable, but it just could have been a little bit better. In the end of the day, I like the volume I was seeing here and price location at the 8 and 21 period moving averages, which are now climbing up. Could potentially be looking at a opportunity for a short squeeze above this red inverted hammer candle, which is 174.5. So this is what this play is for. If it does start climbing up there and spike higher, because the S&P did close at almost all-time highs again, could be looking for another considerable move higher, possibly even finally outside of this channel and outside of this flag. So we'll see what happens. Even though the daily candlestick is a bearish candle, we'll see what happens. Now go over here to my trade plan time frame. I do still have my Fibonacci levels on here because price action has now broken above and started to climb up, made its move. I'm going to go ahead and just remove this here, get rid of some of these levels. And now I'm going to be looking for support here at 171.75 to 80-ish area. So let me go ahead and draw a line right there. It's actually right about where price action did close. So we'll see if it holds support here. And I'll have my stop loss just below whatever price action looks like right there. Now, because this is going to be on the opening, if price action comes down, reclaims and pushes back up, that will be my trigger to go ahead and enter on a reclaim of that level versus whatever the low is down here. Below that, I will also be looking for a entry at the 50-day simple moving average at 170.52-ish area. So let me go ahead and put that right there. Move me another note down here and another note down here. Okay, so I will have two entries here. Because this is a very steep drop, I'm not going to be looking for a break above there because if it does break, it'll probably just chop sideways there for a little bit. So we'll see what happens. These will be my two plans for the time being. I do also want to draw one more line on here, even though this chart is already getting cluttered. Interesting to point out anyways that this intermediate trend broke with strength today and is now potentially simply just a retest of that level. So if I get a nice bullish continuation candle in this area, I will trade above that area versus the low. Target will be temporarily at 175-ish area, and we'll see if it consolidates there for another push up higher to all-time highs. This will be my trade plan for the open on Thursday. Good luck.